U.S. markets took a nosedive today as investors reacted to President Donald Trump's pledge to take control of Greenland. Could it be the beginning of a broader Sell America movement? Well, right now, European countries own about $8 trillion in U.S. stocks and bonds. That's nearly twice as much as the rest of the world combined. And Europe is the region facing new tariff threats from Trump. Peter Armstrong is the CBC senior business reporter, and he joins us now from Toronto. So, Peter, Europe's looking at a bunch of options. Let's talk about this $8 trillion weapon in Europe's arsenal. I mean, how much damage could it do to America if it wanted?
I think the key there is if it wanted. If it wanted to, $8 trillion is an enormous weapon, and they could inflict very serious damage. It would come with a certain amount of self-inflicted damage as well, because you're selling off your own assets. You know, what's the old line about if you owe the bank $100, you have a problem. If you owe the bank, $8 trillion, they have a problem.
They have a problem, yeah.
And that's the problem here, right? So it's not going to be this like quick sell-off of all, the treasuries that Europe has on hand, because a lot of it's held by private equity anyways. But could there be a long, slow sort of movement towards that? And, we saw a Danish pension fund today announce it's going to exit U.S. treasuries entirely by the end of the month. Now, it's like $100 billion, but that's serious money, and it leads into this broader conversation about what could happen and how this might actually unfold. Because remember, the bond market is orders of magnitude bigger than the stock market.
Right.
Tiny little moves in the stock market have sweeping implications, not just for households dealing with their mortgages, though it does for them. It has sweeping implications for governments that are borrowing money. And remember, the Trump presidency, their deficit this year is what, $1.3 trillion. They borrowed a lot of money. So if that treasury yield rises, and the number we're looking for today, it got to 4.2%. If it gets to 4.3%, people get nervous. You'll remember back in April, it went all the way up to 4.8%. And I think that might be the only time that Donald Trump has taken a real step back on a policy and stepped down from the brink. And that was after the Liberation Day tariffs, and they announced that 90-day pause when the bond market ticked up, and they said, okay, and then they started negotiating individual deals. So all of this, really, the sell-off today, the tick up in the bond market, the concern that we're hearing, and the talk out of Europe that this is something worth exploring, really sets up a dramatic day tomorrow as we see when all of this is really going to sort of hit the ground when Donald Trump arrives in Davos.
Well, and if you look at what he's doing, the president, with Jerome Powell at the Fed and what his Justice Department is doing there, I mean, this is all to try to get interest rates down. If things start going in the other direction on the bond market right before the midterms, I mean, there is a whole other problem of your own making. So let's just talk about the U.S. market today. I mean, what happened there today? What are you seeing?
I mean, it's important to remember that yesterday everything was closed for MLK Day, so markets hadn't had a reaction to absorb the news from the weekend.
Right.
So it was really sort of 3 or 4 days of, piled up news really hitting the markets, and they sold off like a rock at the beginning of the day, and they just kind of sat low. They didn't really move, right? The Dow was down like 600, 700 points to start the day, and then just kind of sat there. And I think investors are just trying to get a sense of like, how serious is this? Is there going to be some negotiated settlement? Markets have continually shrugged off the threats, and they feel like they overreacted to every little piece of news in the first Trump presidency, and I think investors are trying to take a broader view of things here. That's being tested, and I think they were testing where we're at today. As we approached the close, there was a pretty aggressive acceleration of that sell-off. The Dow was down 870 points. It was down 900 at one point. The S&P was down 2%. NASDAQ down 2.3%. So that acceleration into the close, again, sets up a bumpy ride going into tomorrow, where you're going to have markets trying to figure out where this is all at, the bond market trying to figure out, is that Sell America trade really happening or not, and all the political aspects of this hitting the ground in Davos when the president arrives. And we'll see, will there be something of a step back? Will this, sort of aggressive approach of, no, this is what we need, we're going to continue doing it, hell or high water, is that going to continue, and how will markets react to that? So everything's going to be kind of feeding off each other tomorrow morning when markets open, when Europe's already sort of halfway through their day.
And what will he say on that big stage at the World Economic Forum that could scare even more people? All right, Peter, thanks so much. CBC senior business reporter Peter Armstrong.